Turn now to Sheila Kahyaoglu of Jefferies to pick up on what Dom was just discussing in terms of those defense names. Sheila, a couple of all-time highs today, but a lot of investors are wondering if this is an overreaction to what we've seen taking place with this missile attack on Israel, especially if details come in and this represents closer to the end of the conflict than the beginning. Perhaps it's too soon to be making those bets.
In general, investors have been positioned very bullishly, given what the S&P has been doing, making all-time highs several times this year. So clearly today we're seeing that rotation reverse a little into the defense names and out of the more cyclical names in our coverage, like the Boeings and the GEs of the world, which have a little bit more beta. In terms of the defense budget, though, what we're seeing is a continuing resolution is running through December 20th for the fiscal year 25. That starts today, essentially, right? So basically, we're seeing the can kick down the road until after elections into what the U.S. budget does. And our base case for that, including inflation, is about 3% growth. And you see about a 2% plus that from what we're seeing internationally in defense budgets. What we've supplied to Ukraine since 2022 is about $60 billion. And, of course, funding to Israel with an $8.7 billion aid package on September 26th. So our base case for defense spending is in the 3 to 5% range. Of course, the events over the weekend and over the last week, as we've airstrikes to sites in Lebanon and Yemen, clearly are spreading the conflict.
No, and I think you're right to turn attention back towards the defense dollars that will be committed to these projects, which is ultimately what funds a lot of these names. If someone said to you, okay, RTX and Northrop, I want to own these names because they provide this or that component to these conflicts, does that simple investment case make sense to you, or would you point to other parts of that story that might dampen enthusiasm?
Certainly for me it does, because I have hold ratings on those names you mentioned, Kelly, Lockheed, and Raytheon. Of course, Lockheed benefits. Their missiles and fire control segment represents about 20% of sales. That's expanding 11% this year, so almost 2x the budget. But it's only 20% of sales, and they have a loss-making program in there, and that's about half the growth. So our hold rating behind these names is they have a lot of revenue upside potentially, but it's coming at a discounted margin. So you're not seeing the EBIT growth come through. In fact, you're seeing some program losses across Raytheon, across Lockheed, across Boeing, their major fixed price programs. So we want names with operating leverage, whether that's an LHX or a General Dynamics. They also have munitions and missiles businesses exposed to that. So a defense prime with operating leverage is preferred, given that they could execute on the top line and the bottom line.
That's a really interesting point. And Sheila, just to make sure people can catch you since you're on the phone, run us through a couple of those names that you do like because of their operating leverage or you think are better positioned right now and maybe has nothing to do with the events of the day.
Yeah, I think in terms of defense spending, our base case is 3 to 5% growth. So we want names with growth above that average and operating leverage on top of that. So General Dynamics, it generates about 40% of sales from business jets. That could be a cyclical upside. LHX is all about profitable revenue growth, so they're focused on growing EBIT dollars above revenues. And then I think a name I'm going to throw in there is Parsons. It's an IT services company. This name has gone up 4x since its IPO only 4 years ago. And they have a great management team behind it, but this company has grown 25% of growth, top-line growth per quarter over the last 6 quarters. And they do government services for the government. So think cyber services, software. So out of the hardware zone into the software. Booz Allen's another name where we have a buy rating. Again, they're about 25% cyber software. So going into some of the software defense names as well in terms of not necessarily bullets, but more bites.
Yeah, just to rattle those off again, General Dynamics, LHS, Parsons, Booz Allen. So a software aspect to this where our mind obviously always goes to hardware as we're watching the events in the sky over there. On defense stocks or on this more, would there be any kind of headwind if jet fuel is back up, if there are supply disruptions? Is that putting too much on the importance of that cost component or no?
In general, we actually see missile defense spending positively potentially impacted by higher fuel prices, given, it fuels investment dollars in certain parts of the Middle East. So that's where, obviously, it weakens other parts of the economy, whether it's airlines, given it's 25% of their COGS base. So
Yeah.
A little bit of mix and match when it comes to higher fuel prices. Lots of variables.
I wouldn't have thought they'd be positively correlated, but if then you think about today, it makes sense. Sheila, thanks for your time. Thanks for calling in this hour.